Good morning and welcome. I'm Tonya Elmore, founder and CEO of the Tampa Bay Innovation Center. We are delighted to have you at the first AI showcase from our new headquarters, the ARK Innovation Center, located here in the stunning Innovation Foundation Hall. This is kind of the agenda that we're having for today. You'll hear from us, our sponsors, and then you will get an alumni update from Black Spaces. Thank you, Rosa and Gabe, for being here today. And then our keynote, which is Kathy Wood, is the founder, CIO, CEO of ARK Invest. And then we'll have our showcase event with our 7 presenting companies. So I just want to give you a little bit of a background about the Tampa Bay Innovation Center. Our history is rooted in Pinellas County. We have been here for 20 years. We started in the top secret defense space, working in Largo, Florida. And I'm excited to share that since we were there 20 years ago, we have now been in downtown St. Petersburg by the end of this year for a decade. And we're happy to be able to launch that 10th anniversary in downtown St. Petersburg. And of course, we can't do this without our partners. The U.S. Economic Development Administration, the City of St. Petersburg donated the land for this building. Pinellas County, a huge partner in our project and our 20-year history. ARK Invest, the Innovation Foundation, TBIC, Florida funders, individual donors like Steve Tangeris, the Steinbergs, Jim Aid, and then corporate partners, Bayfront Health and Duke Energy. Thank you so much for making this facility a reality. TBIC will actually infuse the heart and soul of this building with the presence of entrepreneurs and with the quality of programs like you will see today. So, of course, we can't do this without our board. Board members, please stand. I want to give you guys a round of applause. So, Chris Paradise really helped me for a decade working on this building. Yes, it took 10 years. Just like many of you, your overnight success story takes 10 years when your business is finally successful. And it doesn't make it any easier if you're a not-for-profit. So, Chris, thank you for the 10 years, the many prayers, praying us forward to getting us to this building today, because there are many times I wanted to throw in the white towel. Rob Kavusta, thank you for your dedication of helping with the programming and helping us secure the land with the City of St. Petersburg. And Doug Martin, for your long tenure, setting up our vetting and mentoring committees, and for being with me almost on this whole 20-year journey. So thank you, each of you, for being here today. I don't think I missed any other board members. I do see a former advisory board member, Irene Hurst, in the room. She started with us 20 years ago as well. So Irene, thank you for coming today. And of course, our staff, they're still with me. I don't know why. We moved in here like 5-6 weeks ago. And since then, we undertook our move. We moved in about 15 clients. ARK Invest had their Big Ideas Summit here last week. We then hosted the Florida Business Incubator Association here 2 days later. People came from as far as Germany. And then now we have our showcase event in less than a month and a half. So yeah, they're still here for today. I don't know how long, but thank you, Ken, Joan, and Mary, for making this a reality. And then, of course, our corporate champions. Yes, a big round of applause to them. So I don't know how many of our corporate champions are with us today, but ARK Invest, Pods Moving and Storage, and then Moral Consultants and Mach 49. I don't know if Marvin is here. If he's here, he is also on our board of directors. They played a big part in vetting the 200 plus applications down to the 7 or 8 that you will see presenting today. So they have been instrumental in providing mentors and advisors and vetting advice. So thank you for being a big part of the AI cohort. And then, of course, a special thank you to the sponsors of our event here today. We have Pinellas County Economic Development, the City of St. Petersburg, the St. Pete Chamber of Commerce, Fulcrum Equity Partners, Tampa Bay Ventures. Jim Aid is a former client of ours who's graduated and has decided to give back annually. So it just shows that success breeds success. And we're very excited to have him on board as a presenting sponsor. So, Jim, if you're in the audience, thank you as well. So now I am pleased to introduce a friend and our presenting sponsor, which is Steve Tangeris with Dabble VC, to come up and say a few words. Thank you so much, Steve, for your support in making this event happen today.
Thanks, Tonya. I probably should have stood a little bit closer. I've been out of the area for the past few years, so this is the very first time I've seen this place. I was asking Tonya when I came in this morning, when did you first mention this? I don't even remember when. I don't remember seeing the initial designs, but wow, like this is amazing. And the 10-year overnight success thing, I started my first company here in the Tampa Bay area in 1994. And Mark Swanson and a few other people here, we were talking, and somebody said, well, I hear, Joy, I hear people say that, that this area has changed. And Joy said, it hasn't changed. Like, this stuff has been happening for a long time, but it has changed, Joy. It's a much different place right now. Being away and coming back and seeing this, it definitely has changed, which is good. And that's how progress is made. That's the only constant, right? Change. But a lot has stayed the same. And the parts that have stayed the same, to me, is what makes it happen. I don't remember when Tonya and I met, Ken, Joy, like, there's people in this room that have just always been here. Ruben, I remember, like, at the way back, I don't even know what the timeline is anymore. But as I was driving over here this morning, going over the bridge, I was thinking, my wife said, yesterday, I said, I think I'm going to need to say some things at this at the Tampa Bay Innovation Center thing. And she was like, are you going to prepare anything to say? Because sometimes when you talk, you sound like a drunk baby. And I said, yeah, but I'm equally as likely to completely fail if I plan. So I was just kind of thinking about what I might say as I was driving over the bridge. And time is really, like, interesting. They say, like, as you get older, time seems to go faster because, I don't know, like, you remember when you were a kid and summer seemed to take forever and a week took forever, but I think it's just always going fast. Like, it was going fast when I was starting a company for the first time. I remember the first investor presentation that I gave here in Tampa Bay. I started with really cheesy line, don't use this, but I started with we're living in extraordinary times. Technology is enabling one person to do what took dozens of people just a few years ago, and I didn't raise any money that day or even a few years after, but I remember how I felt at the time, and the way that I felt is that if something didn't happen like right then, it was going to be too late. Like, everything was just moving so quickly. It was the .com age, and like, just everything was just happening so fast. And I thought, like, it's just got to happen now. But now reflecting back, it is like Tonya said. I mean, it's just having a vision and really deciding, like, this is what you're going to do, and this is what drives you. And if you do that long enough, Sarah and I were talking about this earlier, it will come together at some point. And I'll close with something that my mother used to say. She said, time heals everything. And when I was younger, she would say that, when you fall off your bike or whatever, like, you'll get better. Time will heal everything. But as I got older, I realized that, the problems that you have didn't exist some time ago. So time also creates problems, right? So it doesn't just heal, it creates. But the point is you're going to ebb and flow with whatever happens. So for everybody that is, gone through this or presenting today, the main thing is just, like, continue pushing forward and continue trying to make change. And over time, you're going to get these kinds of outcomes, this place like this. So my hat's off to all of you that made this happen, and to everybody else that is pushing to make change in any form. So thank you.
Steve is really big into time. If you've ever heard his Ignite session on singularity, I think it's on YouTube somewhere. It's very interesting. I would encourage you to learn a little bit more about that and how he's actually invested in AI and been a serial entrepreneur and a supporter of our center. So thank you, Steve. I really appreciate it. Now I'm going to introduce you to someone I now has a new name from his cohort, Coach Ken. Coach Ken, please come forward. Ken Evans is our managing director and runs all of our accelerator programs and does a phenomenal job here at the center. So thank you, Ken, or Coach Ken.
Thank you, Tonya. So I'd like to thank you all for coming today. It really means a lot to have the community turn out for something like this, the support, the encouragement that we have for our entrepreneurial community. And for those that are outside our entrepreneurial community, we have so many people over the last, this is the 7th cohort that we've run of the Accelerator program. And thanks to COVID, most of that has been all remote over Zoom. So a lot of times I've never even met the founders that have participated in the program. Luckily, this time we're able to have this building and have a face-to-face event. And then hopefully going forward, we will do all of our cohorts face-to-face. So that means we need local companies. That means we need to draw on the community and the great ideas that are happening here in this community to participate in this program and really take part in this face-to-face. So again, thank you very much for coming. I will be asking more of you later in the event because it makes, as Steve was saying, it really takes a community to make this happen. We have our panel, missing one right now, so I'll introduce them a little bit later, but I'm sure Andreas will be here in time. But before we get into the main program, I want to recognize and check in with one of our previous Accelerator alumni. Our alumni companies, many of which have made significant progress in launching their products, engaging customers, expanding their teams, and in some cases attracting investors from all areas of the country. And today, the feature team I'd like to bring up is Blockspaces, and Rosa Shores is one of the founders of Blockspaces and a new resident of this building. Thank you. And to give an update on blockchain and Blockspaces. I'm sorry. Come on up, Rosa.
How do I switch the? Perfect. Oh, it's so good to see you guys today. We have been part of this community for a very long time. I'm Rosa Shores. I'm a co-founder and CEO of Blockspaces. And we were a proud Cohort 3 alumni. So that was back in 2021, early 2021. And as Ken mentioned, we're now a resident of this beautiful facility, still an awesome member of Embark Collective as well. Many of you know that we have very deep roots in the Bitcoin and blockchain community here for many, many years. And so it's great to see a lot of friendly faces in this room. So Blockspaces emerged from Cohort 3 in 2021 with a focus on building a middleware platform that enabled seamless integration of blockchain-based applications with traditional financial software, with a specific emphasis on integration of the Lightning Network, which is a layer 2 protocol that allows users to send or receive Bitcoin quickly and cheaply by moving transactions off the main Bitcoin blockchain. By uniquely monetizing our core infrastructure at the time, we generated over $11 million in revenue and attracted more than $7 million in venture capital by mid-2022. And we became the first and only Lightning integration available in the QuickBooks Marketplace. Then came Q3 2022, which served as a stark reminder of the perils of excessive leverage and interconnectedness of the financial markets. Not without precedent, the events of 2022 echoed the same traditional finance practices that brought about the 2008 financial crisis and led to a domino effect downfall of major players in our sector. The billions of dollars of losses reverberated throughout our industry, impacting even those that were not directly involved. As our business, along with many others, experienced the indirect consequences of these catastrophic losses, we became aware of the responsibilities of an enterprise risk manager. Risk managers assess collateral risk by analyzing asset quality, quantity, and liquidity alongside market value and volatility. They ensure compliance with legal standards while mitigating counterparty, operational, and market risk. Effective collateral management safeguards financial stability and liquidity, enabling organizations to meet obligations and mitigate losses. The limitations of existing risk management solutions to support digital assets like Bitcoin in these emerging markets became very clear to us in that 2022 timeframe, and we saw the urgent need for innovative Bitcoin native infrastructure for this particular $1 trillion asset class that we believe actually to be the most perfect and pristine collateral in history. So in the midst of this market downturn, which is always the time to build, by the way, we began architecting how we could use the Lightning protocol and its unique peer-to-peer channel structure for collateral movement instead of payments. So today, we see Bitcoin spot ETFs enter the market, and the integration of Bitcoin into traditional finance becomes clear and inevitable. We are very excited to announce that we will be in pilot next quarter with some outstanding finance industry partners with auto-reconciled collateral on Lightning. Using a custom Lightning implementation and leveraging our existing integration platform, we have built a unique Bitcoin native smart contract solution specifically designed for risk managers across various sectors, including hedge funds, brokers, trading desks, lenders, and market makers. With the flexibility to support a variety of financial instruments, including lending, OTC forwards, and even unique Bitcoin derivatives, the system dramatically reduces counterparty risk, jump risk, volatility risk, and eliminates rehypothecation. 24 hours a day, 7 days a week, 365 days a year, automatically reconciling collateral every 10 minutes with no need for manual settlement and without market hour and time zone restrictions. With an API on our roadmap to seamlessly connect to existing both front and back office systems through our existing integration platform, I'm very proud of what the Blockspaces team has accomplished to date under some extremely adverse circumstances. And after more than a decade in this industry, I have never been more excited about the future and our long-standing vision since 2012 to build a more stable, reliable financial system. This community, as you all know, is our home. Thank you so much for Tonya and Ken and the whole team at Tampa Bay Innovation Center. We are so happy to be here. Of course, Kathy Wood and ARK Invest moving to town has validated so much that Gabe and I have been talking about for the last 10 years. Lakshmi and the Embark team, of course, we love Tampa Bay Wave, Synapse, local universities. We have partnerships with UT and USF. Our amazing investor partner, Chris Pizzo and Druid Ventures, who's here today. You guys are just unbelievable. I could go on, but we're very privileged. Anyone that's working in this community is very privileged to be here with all of these organizations that are so dedicated to making founders successful. We have been told so many times that no matter how rough it gets, to just keep innovating, and that is what we have done. Blockspaces certainly would not be here today without the support of this community, and I would encourage all founders here to leverage these resources, build the future for the next generation, and change the world. Thank you.
Thank you very much, Rosa, and congratulations on your success and all that you have accomplished over the years since leaving the cohort and way beyond. I mean, you really were a foundational element of the blockchain community. I mean, that's how I first got to know you, is the co-working space that you were working at in Gandy. You were doing meetups, you were doing pizza parties, you were doing fake baked goods. I mean, everything to bring attention to the fact that this was an element, a new element in our tech community that really no one had a lot of experience in. So the fact that you leaned in heavily into doing that, educating our community, helping people understand the opportunity that most people didn't see yet, is a great testament to what you knew and shared with the community. So that being said, I want to talk a little bit more about the community that we have supporting it. So Steve talked about that a little bit earlier, but I want to give special thanks to all the people that were guest speakers in the cohort. We obviously, as I mentioned, we did this over Zoom, so we were able to pull in a lot of people from our collective Rolodexes as a tech community to be subject matter experts. And so I picked a lot of people that I knew personally or that were connected to that were operators, either current or former operators, people that have startup experience, people that have been down that path, that they have the scars to show for what they have built, what they have launched, and maybe what they haven't launched. And so I want to thank the people that many of who are here in the audience today, but people that I've known over decades that bring their experience to share with the community and share with the early stage startups to tell them a little bit more about their journey, to talk about what it means to actually build and ship a product, which really is critical for us as a tech ecosystem. We always talk about we just need to do more marketing as an ecosystem. Marketing is nice, products are better. Products do the marketing for you. Products actually build your reputation as a tech ecosystem, and I can't say that enough. If you ever do a call with me, if you ever get on a Zoom and introduce your company, I'm going to ask two things. Who is the customer that's going to buy this? And what is the product, and when are you going to ship it? I guess that's three questions. But it's so important as a tech ecosystem that we keep our heads down, focus on building and shipping that product, because that's what really brings success to the company, revenue to the company, testimonials from customers, and really gives us the ability to stand up on the world stage as a tech ecosystem and talk about what we're shipping, not just what we're marketing. So thank you to all the people that are on the slide, all the organizations they represent. Thank you to the overall engaged community, all the companies that make their people available to come and present and be part of this ecosystem and be part of this cohort. I always get great accolades from the people that go through the program on the quality of the speakers and the type of people that we bring in, because they are bare bones. This is what I did. This is where I failed. Let me tell you about the journey. It's going to be tough, as opposed to sugarcoating it. Isn't that true? Yes, so that's one of the things that we really want to focus on going forward, is to be able to thank and engage those people. Good morning, Kathy. So with that being said, I need to do a quick slide change here and bring up some other PowerPoint. But before we do that, I really want to talk about the program and what we do. The program, the accelerator program that I run, is a 12-week workshop. We've been doing it over Zoom, but it still has a full-day commitment by the people that are going through that. We focus very much on who the customer is, who are you going to sell this to, and what are the problems that you're trying to solve. I actually have a template that I've used many, many times, especially when talking to the local entrepreneurship programs. Is there a need for what you're doing? Are you actually satisfying demand? Or are we trying to be just overly enthusiastic about the next great technology? And that is really what separates people that are committed to building something to ship versus those people that just want to jump on the latest bandwagon. So this particular cohort was focused on artificial intelligence and machine learning. That was a little bit different because we've always been focused on climate tech, sustainability, enterprise applications. But we wanted to focus on what does it look like to get into artificial intelligence? Well, how can we leverage the tools that are out there today? And what is the start of that journey? We always hear about the hero's journey of the solo entrepreneur. But to me, innovation is a team sport. It's a roller coaster of iteration after iteration. And there are few technologies that represent that relay race of ideas more than AI. Last month, the Apple Macintosh turns 40. A few years ago, we celebrated 50 years of the internet. It's been 60 years since the Beatles invaded the United States. But we can trace both the skeptics and the proponents of artificial intelligence back to the 1840s and Ada Lovelace. And then 100 years later, Alan Turing. This has been an ongoing, iterative team sport of figuring out what artificial intelligence and machine learning is actually going to look like, and more importantly, how we're going to apply it to business and personal life. So I think we can trace it back to all those people that have started, that had failed, that were skeptics, that were proponents. When I was in college, I used to kill spare time on a deck writer terminal talking to Eliza, which was one of the very, very first chatbots that was available back then. It's come a long way, and the tools that are available and the things that have been announced in the last couple of years, like with OpenAI and the various large language models, gave these founders the foundation to actually integrate artificial intelligence into products that could be used by enterprise customers, small businesses, and in some cases even consumers. So with that, I would like to bring up our keynote speaker for the morning. I'm going to have to do a quick change of slides here, so bear with me.
All right, thank you. I'm going to move away from the wall. Does that help a little bit? Okay, so Kathy, thank you for being with us here today. As many of you know, Kathy Wood is the founder, CEO, and CIO of ARK Invest. She has been in St. Petersburg in the Tampa Bay region since 2020, and she has partnered with the city and the county and Tampa Bay Innovation Center on this facility. And the beautiful building is called the ARK Innovation Center, and the hall that you're in is the Innovation Foundation. Since her tenure here of, 2 years maybe, not quite 2 years, 3 years, I guess, I can't count, is that she's not only partnering with the ecosystem here for tech entrepreneurs, but she has made a partnership with Pinellas County Schools and bringing in the innovation curriculum into the region as well through middle schools. But I don't know as much about that as she does, so I'm going to hand over the mic to her, and join me in a round of applause for having Kathy with us today.
While they're figuring this out, I'll start. Today's actually a really important day for AI. NVIDIA is going to report its earnings, and it was about a year ago that they reported a 13% decline in revenues, but then said that the next quarter was going to be up something like 60%. What was it, Joseph? Was it 60%? It's even more than that. And so they're probably going to have a great report tonight. AI is doing. But I'll tell a little story about my experience around the beginning of the internet revolution. So in 1993, so it's 30 years ago, AOL's email was basically you could use it over the internet for the first time. 30 years ago, and there was a boom of investment into the space, people really understanding what this internet thing was going to do and how profoundly it was going to change the world. I remember in 1994, so again, about 30 years ago, around this time, at Montad, one of our prior curves, we had hired an analyst who had been one of the top analysts on Cisco. So Cisco really built the backbone of the internet throughout the world. And she joined us, and the stock promptly dropped by 50%. And here we were thinking, oh no, have we made a terrible mistake? Were we getting all caught up in the hype? What had happened, and I think we might be evolving into this situation here now, because it's about the same amount of time. What had happened was companies were saying, okay, this internet thing, thank you, this internet thing is real, and we need to, and different departments were experimenting, doing different things with it. And the top management began to say, we need to think about this strategically in our company. At the same time, so much capital flooded in to the space. Competitors, so it was some of the names I remember, Sycamore, 3Com, competitors really threatening to dislodge Cisco. Well, that did not happen, but there was a lot of confusion at that time because, again, corporations were saying we need to think strategically, we need a very big investment, and we want to get it right. And of course, Cisco did win the game, but that didn't mean we weren't going to have violent swings in it. And that could happen to NVIDIA, maybe not now, but there is so much capital pushing into the space. And there's a question about how much of the space is going to be commoditized by open source models like Llama 2 and others. I think Chubal just put out one today. It was a smaller one, but there was a big controversy going on out there about open source versus closed source, which of course was not an argument during the early days of the internet. So why don't we get into, let's see, here we go. That was the we have to put this disclaimer up. If Kellen Carter, our Chief Compliance Officer, were here, we'd pay a little more homage to it. So technological convergence. I'm going to start by, remember that word convergence. We're going to see all kinds of convergences, and this is a reason that, and not just between and among technologies, but between and among industries. Technology is permeating every industry, every sector, so there's a blurring of the lines, and the opportunities, therefore, are huge as AI scales across sectors. So here are the 5 platforms around which we have centered our research. And you can see AI is the middle and at the heart of this. AI is going to be the biggest catalyst to all kinds of innovation moving forward. So it's a huge source of the convergences we're going to see in the years ahead. In the tech world, many people kind of ignore healthcare because it's regulated. There are payers that will refuse to pay. It's just people don't like healthcare. Healthcare people don't like tech. And yet we think that this is going to be convergence between among multi-omic sequencing, so not just DNA sequencing, but RNA, proteins, methylation, and so forth, artificial intelligence, and CRISPR gene editing. We think that combination is going to cure many, many diseases moving forward. We've just had the first FDA approvals of two CRISPR therapies, one for sickle cell disease, one for beta thalassemia. That's transforming people's lives. And so one and done, edit the gene, cure it. It's really remarkable. But if we didn't have sequencing and we didn't have AI, we wouldn't be able to get there. We couldn't identify the mutations, the programming errors that lead to the editing. Here is why we think we're probably this is the biggest moment for technology industry. And it's because these 5 platforms are evolving at the same time. This is a timeline of innovation going back to the 1700s. And the height of these waves gives you a sense of how much these new technologies are going to contribute to increasing real GDP around the world. If you look at the consensus estimates out there, you'll find that most expect real GDP growth to drop from 3%, where it's been for the last 125 years. That's global GDP. To 2.6%. We believe that these new technologies are going to accelerate real GDP growth from that 3% to 6 to 8%. You don't hear that out there anywhere. Nobody believes that. So if we're right, and these expectations are not in the market, a lot of people are going to be very happy with their success. Here you can see the 5 platforms broken out by their technologies. We could also see the biggest wave before this was in the late 1800s, early 1900s, telephone, electricity, and internal combustion engine. Completely transformed the world, got us out of the farms, right? This one is bigger. We think it could be 2 times as impactful as those 3 platforms were more than 100 years ago. Then you can see the technologies within robotics, energy storage, artificial intelligence, multi-omic sequencing, and blockchain technology that color-coded up here. You can find this in Big Ideas 2024 on our website, ark-is-best.com, if you want to go into this in great detail. Here is a chart of how these technologies are going to interact with one another. and which ones are going to have the most profound impacts on the global economy going forward. AI, right in the middle, is the purple. It is going to have more of an impact on these technologies than any others. And I think many people are also surprised to see robotics up there. Robotics is also, that's the word in red, is also going to be more impactful than people recognize now. And the reason they don't recognize it is we've had robotics for a long time, industrial robots, but they've been so dangerous, they've been locked up in cages, right? Especially in auto manufacturing plants and so forth. Now with sensor technology, they're going to be covered with sensors and they're going to be working alongside human beings. And just to give you a sense of what's going on already in this realm, Amazon, for the first year since its inception, had a strong unemployment last year as its robots doubled from 500,000 to 1 million, and its employees dropped from 1 million to there was 1.5 million to 1.4, something like that. So well, underestimate that. AI is accelerating faster than anyone expected. Even we've been pushing the envelope, and most people think we're a bit crazy when we say some of the things we do. But if anything, we've been too conservative on this. And here is a chart, not drawn based on our forecasts, but based on the forecasts of futurists out there who contribute to this database. And the question is, how many years will it be until we launch artificial general intelligence? What does that mean? It means being able to pass all kinds of tests, like the GRE, the medical tests, the law tests. It also means being able to put together a very complicated model car, and it also means conversing with an AI for 2 hours, and the person not knowing that the human being not knowing that the other side of the conversation is a machine. So that's the definitions broadly. In 2019, before GPT-3, which gave us ChatGPT, these futurists thought it would be 80 years. Today, they think it's going to be 8. And if they continue to make the forecasting error that they have during the last 5 years, it will be 2026, 2027. So I have no idea if that's true. Maybe this will reverse if we have some kind of backlash or some kind of technological setback. But we wouldn't be surprised. That's still quickly the world's changing. Economic impact of selected technologies over time. You can see how AI looks relative to the steam engine, which was the biggest before now. The steam engine is there. So pretty provocative. Here, the thinking stock market is the impact of innovation generally. And you can see what we expect to happen here. Disruptive innovations is a day in the marketplace, global marketplace, private and public equity is valued at roughly $19 trillion. So closing in on 15% of total market cap. Then you see it based on our analysis. You can see building blocks of this in our big ideas. We believe that 19 trillion will go to 220 trillion in the next 7 years, really 6 to 7 years, which means these technologies, the growth rates will compound at a 40% plus annualized rate. But pretty provocative. You can also see what we think is going to happen to the rest of the market. If you think it's going to deliver subpar equity returns, so over history, equities have delivered 7 to 8% over time, annualized, plus the cycles in between. And you think that's going to 3% for the non-innovation world? And the reason is disruptive innovation causes creative dispersion. So just think about what's happening in the auto market right now. I know a lot of people think, oh, EVs are having a setback. As the price of the average electric vehicle drops to $18,000 to $20,000, what do you think will happen within the next 5 years? The internal combustion engine is going away, and a lot of our economy is based on investment development. We can see the growth rates broken out by category: AI 37%, energy storage 50%, public blockchains 48%, robotics, very low base for robotics 78%, and multi-array sequencing 30%. So artificial intelligence. So I think many of you have seen this chart, but it is pretty provocative too. She put in perspective ChatGPT, 100 million users within 2 months. If you look at WeChat, it was within roughly a year in China. YouTube was YouTube. It was TikTok. That was about a year and a half. So you've never seen anything like it. And of course, companies, now that they understand this is the ticket to success, the rate of mentions has gone up dramatically just in the last year. Here, already we're seeing massive productivity gains. Coding is where we've seen it the first. And you can see without Copilot and with Copilot, doubling in productivity. That's pretty amazing. Coding was a bottleneck in the economy. That is going to disappear now. And especially because natural language processing is here. And we all speak natural language, right? All we need to do to become developers is learn how to prompt engineer. And if you go to sites like Replit, which basically will do 80% with AI, any program that you ask it to do, you just have to learn it, and you just have to prompt engineer it to get it to the finish line. So pretty amazing. The other thing you'd work, if you look at consultants using generative AI in 2023, you can see before and after. This was a study of Bain consultants, I did. And you can see that with Gen AI, the speed of completion of the tasks, whatever they were doing, went up 25%. What I find and we find, which still provocative, is on the quality of their work and the difference between high performers and lower performers. So if you combine that with the jump from without AI to with Gen AI is about 35%, about 30%. But you can see that high performers, their improvement was only 17%. The lower performers up 43%. So there's a real, leveling of the playing field here, which is really interesting. Here is how far we've come on test results with all of these. You'd all beat the GPT-3, 5, 4, 5.2, GPT-4 Vision. Some of them are better. For example, Claude, which is Anthropic's, is much better at verbal than GPT 3.5. And GPT-4 Vision got there as well. But it is interesting to see the differences for one analog and the other. Here's just the rate of improvement. This is 2016. AI put in text. Our very developers walking across a green grass field, and they got all kinds of blurriness there. Well, 22 Mid-Journey, and we saw Mid-Journey and said, wow, that's such an improvement in such a short period of time. But look where we are now, version 6 Mid-Journey, 2023. Really provocative. I probably am not known. I need to help. This most people don't know. Even those really well acquainted or deeply involved with AI, the cost of authoring written content, we go back into that late 1800s, the cost of authoring written content per 1,000 words has varied between $300 and $500, adjusted for inflation, over this entire time. Look what happened last year. GPT-4 took that, I don't know, it's probably closer to $300, down to 16 cents. That's crazy. And then Claude took it down to 4 cents, so 25% of what GPT-4 did. I mean, this is how quickly the world's changing and how discontinuous this technology is. We have never had anything like this. So, pretty exciting. And I'm just going to go a few things. So, model training performance gains. So, up fivefold, you can see why. Moore's Law would have predicted that. NVIDIA outperformed this Moore's Law. And then the rest of it is algorithmic, accelerator optimizations, and then algorithmic optimization. So, it can, a fivefold improvement, which is pretty phenomenal. And that's just in 1 year. And this here, training costs, hardware, and software. You can see this is, I won't go into it, but we use Wright's Law. Wright's Law is a relative of Moore's Law. Moore's Law is a function of time. Wright's Law is a function of units. And I had been asking our research team, since we were founded 10 years ago, let's get a metric that will give us a sense of Wright's Law in AI. We just couldn't do it. But now, and Joseph has had a lot to do with this, now we are, and I won't go into it, cumulative our RCUs produce, dollar per RCU, those are the two scales. And you can see we algorithmic model enhancements, lower training costs like 47% per year, and RCU production costs by 53% per year. We've never seen drops like this before. Technology is associated with the learning curves. Learning curves are characterized by cost declines. We've never seen this before. I will say there's one category here that's going to be could be more rapid, and that is robots. But when you think about it, robots are the convergence of three technologies. Artificial intelligence, well, I should say, let me use autonomous vehicles, which are robots. They're going to explode upon the scene, we think, because it is the convergence among robotics, autonomous vehicles or robots, artificial intelligence, they will be powered by artificial intelligence, and also energy storage, they will be electric. For the reason I told you before, costs are flaps and bare, too. Cost declines, and here are more cost declines. Inference costs, 86% annualized decline since 2021. And you can see GPT-3 on this side and GPT-4. GPT-4 is 92%. So they're getting unbelievably, they're evolving unbelievably rapid. This is all of our research at the regional research. I'm going to end on this chart because I think one of the controversies out there, and I started with it, is closed source. Think OpenAI. Elon Musk will say, wait a minute, I founded that, and I meant it to be open, and now it's closed. So OpenAI is a closed model, and GPT-4, you can see right at the cub there, is incredibly performant. So the dates are on the bottom, the x-axis, and the log error for ML view performance. You can see that how GPT-4 is the best performer out there. Now, what you can also, so the private models are in lavender. Is they're closed. If the lavender dot is open, it's less performance. So we've included a lot of them there. So purple is private, black is open source. You can see that open source is not as good as private or closed right now. But it's good enough. Free is much better, right? It's good enough. And look at what the slope of those two lines is doing. Open source is gaining on closed. And I'm a big fan of open source. And there are reasons that I might be wrong on that this time. I mean, because I've always viewed open source when you've got so many developers focused on one platform. It's like a giant neighborhood watch, right? This is your livelihood. You want to make sure it's a safe and secure place to be. So I've always felt that that is a stronger model. AI might be different, but I really do like I do like the increasing performance relative to closed. That's a hopeful sign. So I'm happy to take questions.
Yes. The name's Jim Liberfido. I'm a digital asset strategist at a group called the Global Blockchain Business Council, which is a nonprofit to try and shape legislation around at least that end of the spectrum. But I totally agree with you. The recent innovations make it very clear that this is accelerating at a pace that people aren't really ready for.
Yes.
So I'm just curious as to what your thoughts were on policy guardrails, especially as it pertains to AI, general AI, and sentient general artificial intelligence.
We are so early in this movement.
Yeah.
It would be like, and this is the same point we faced in the early 90s, at the 90s period where regulators wanted to get involved in the internet, and they wanted it to really be regarded as a utility and regulated as such. And that didn't happen, thank God, because that's why we kept our lead in that space. I think Europe is writing itself out of AI. And I've already told you specifically about AI for blockchain.
Yeah, I'm more concerned about general artificial intelligence and your perspective on that.
Right. That's what. So I think there's going to be a lot of regulatory arbitrage. If you're involved in blockchain, so you know what I'm talking about. The U.S. is this terrible.
Yeah. And
so a lot of innovation has moved abroad. And in fact, in many cases, those companies abroad involved in digital assets of many kinds don't want to accept U.S. customers because of our regulatory system. I think, and we do know that President Biden issued an executive order about AI. And we looked through that and we're saying, wait a minute, this so favors the incumbents, and is really going to put at a disadvantage the real innovators from here on in. I think a lot depends on this election, actually. And to the extent, if we continued with the Biden administration, I can't tell you we'd continue to move the way blockchain technology has moved. Because I think there are Democrats and Republicans who are saying, wait a minute, we can't deal ourselves out of this. Blockchain is one thing, that's messing with the reserve currency of the world, right? This is different. This is technology. This is what we do. This is what we've, our country has excelled at. So, but I do think a more conservative administration would not want to regulate AI at this stage. It'd be the same as doing it in, the internet in the early 90s. People didn't know what was going to happen in the internet. Remember Katy Perry, what is this, So, and many people don't understand what's going on here with AI either. So, blockchain technology, just to close this loop here, it's been fascinating. We do a Bitcoin brainstorm every month. I don't know if you know about it, but we did one. Our second one was on the convergence between Bitcoin and artificial intelligence. And this is already happening in the emerging market. So we think about the gig economy here, through Uber, Airbnb, and so forth. put that on steroids, and that's what you're getting in the emerging markets, where a complete revolution in terms of division of labor, much like in the early 1900s at the assembly line. So obviously, I hope they don't. And I do think that those going to Washington, like Sam Altman, it's in their vested interest. As always, whenever there's regulation, it helps the incumbents. And that we don't need. We don't need that. We need real creativity and passion. The government's not going to get in our way. Okay, I keep going. Yes.
I understand these barrier models consume huge amounts of energy cloud for energy consumption being possible block to this algorithmic fraud.
Yes, so the question is about energy consumption. Any new technology, I remember the internet in the early days, and then Bitcoin a few years ago, the pushback against these new technologies, this uses as much electricity in the case of blockchain technology as they'll name a country. It's like through that. Oh, I don't know. The same was true of the internet back in the day. Energy is very much is a critical input to any new technology, to anything we do. And so, yes, we hear that as well. But I do think as the benefits of AI start to surface, and as we move more towards smaller models for more specialized tasks instead of general models, which is overkill, I think we'll become more efficient over time. Joseph, I'm missing something, I feel. Is there anything else?
On energy sensitivity, Steve, generally they get more components for energy.
Yeah.
Yes.
Absolutely. That's right. Just like with the internet, with blockchain technology, we are going to see more efficiencies as the platform evolves. Yeah. Yes.
Kathy, how would you assess the cumulative impact of AI, particularly with respect to the workplace?
Yes. Well, anyone who has used ChatGPT to write your emails and write rants, maybe, and is learning that this is a huge productivity goal for us. We think knowledge worker productivity is going to go up fourfold. So think about developers, especially software developers, where there's massive shortages. Fourfold increase in productivity is, okay, you're paying this person $500,000, let's just say. But in 5 to 6 years' time, that person, or sooner, that person will be 4 times more productive. So it's output per man hour is the definition of productivity. And we think this is going to provide the biggest productivity boost in history, as I showed you from the timeline back then. And I think I showed you another chart as well. So we're trying to calm people who are worried about it by saying, this is really augmented intelligence for human beings. And sure, just like every technology, there will be displacement at the margin, but the opportunities coming out of this are going to be so profound. The most important thing is, don't cling to your old ways. Get on the right side of change and ride this wave, because it's going to be magnificent. So that's the first thing we say. And I was going to say something else, but that's our primary message.
Was it 1/4 the workers, the workforce in the future, or?
What usually happens with a big productivity advance, and we saw this during the Industrial Revolution, the assembly line, is people choose to work fewer hours. Some people for the same pay or even more pay, because they're so much more productive than they were before. We have a chart of that in big ideas. So you'll see during the industrial accelerated to the downside. And also, if you think about what happened on this farm, there are a lot of children who were unpaid. They just weren't paid. And then you look at all the opportunity they had as they entered the industrial world. So those are the sorts of things that going to go on. Yes, sir.
Maybe one last question, because Kathy, your team said you're on the clock, so.
I probably yes, because I have an interview. Yeah. Oh, okay. I was working around the room, so can I take one more year and you here? Sure. Okay.
So first of all, thank you. My name is Giorgio. Every time I get stuck, I have two folders, yours and Mary Meeker's report. I think that yours is only since 2014.
Oh, wow.
So thank you for getting out of trouble more than once. I sold an AI company using industrial military-grade AI 3 years ago, so I may know something about this. So I have two questions for you, really specific. One is, I don't know if you maybe you'll not remember the Mikey commercial. Every time the little kids phone say, "Oh, Mikey,
yeah.
AI has become Mikey."
Yes.
Anything is going to be solved by AI. So what's your view on the hype and that? And there's another technical question, that of asymmetrical risk. I find it amusing when people say, well, AI is going to solve 80% of the problem. But what they fail to recognize is that that 10% possibility of failure is catastrophic. So how do you balance that when you assess portfolio risk, asymmetrical risk? So pick one. You don't have to answer both.
Okay. Since I forgot the first one, I'll talk about it. So, yes, one of the answers to that question, this is the first time that we've heard visionary leaders like Elon Musk and others say, this could become very dangerous. And we know that our government is very focused on, they come to us, they want to talk to us about it. That our government is very focused on the risks. Half of the solutions is understanding the problem, and all technologies have been used for nefarious purposes. So that's our answer to it. When you say catastrophic risk, you mean like a war? Is that what you mean?
No, even more fundamental things like we build an AI platform that flies fighter jets. A 10% failure rate means it crashes.
Oh, yeah.
Not flies left or right, it crashes. That's not a problem.
Yeah, but okay, so you're talking about autonomous. We've done a ton of research on that. And just in the electric vehicle space, everybody said, this is terrible. This is like the class of one is, okay, this machine has to make a choice between this child walking in the crossway and this telephone call, which is going to kill its passenger. What's it going to do? That's the real question. So we know, and we know from Tesla's data, that autonomous, or that 80 to 85% of all human accidents are caused by human error. All accidents caused by human error. Same with the fatalities. So if you take the human out of the equation, let's say 85% of the lives. And, the Transportation Association, national one, is quite embarrassed because deaths in the United States had been falling from, I think it was in the 70,000 per year, got down to a little above 30,000 as we were starting ARK, and now up. Why? Disproportionately young people. Why? Texting, right? And so they are very amenable to thinking about autonomous. And if you look at a Tesla car with full self-driving, the number of miles between crashes is 3.2 million, and this is on surface streets, not highways. 3.2 million. If you look at the average car out there, it's 190,000. There's no comparison. So puts and takes all of this, but I'm glad that people are worried about it. I'm sure. Happy? Yes.
I'm a huge fan, first of all.
today is that the geopolitical situation over here, and I'm going to get my son for free. Well, you're a neat team here. Lisa, Chief Marketing Officer, Ali and who's one of our senior call-to-action analysts, Joseph and Daniel, both research associates working on AI and autonomous technology and robotics. So, yes, but thank you. Geopolitical, of course, I'm more worried now because Thailand's economy is blooming. And what we've seen over history is when leaders are trying to get out of trouble, they're going to change the subject. And how do they change the subject? Often war. Now, I've read a lot about this, and if you don't know Ferguson, he say, that's not been the history of China. It's always been, they've not tried to invade other territories. They truly believe Taiwan was their territory. So, but still, worried about that. I think the debt inflation associated with their property is much worse than people understand. And today, Xi Jinping basically said, no selling of stocks at the open of the market or at close of the market. And we shut a company down yesterday for shorting, for the ammunition. So there are a few panic signals there. And I guess that would be the biggest one, I would say. And the other one we worry about is, if we're right, energy prices are going to continue falling. So again, changing the subject, Russia, their oil deal, Middle East, they're trying to change the subject in a positive way. Then we're going to be much more towards innovation, which China is trying to do as well. So yes, you do think about it. One of the things we always say is innovation solves problems, and it typically does solve problems. But wars are going to require and
yes. This Monday, Susie, so my work here in robotics and AI for energy battery.
yes,
And one of the trends that we do see back to the workforce you see is that a lot of economists are predicting a worldwide labor shortage because younger people are having less children or no children, and that the robotics and AI is going to grow at the pace that you said, simply to solve some of the labor shortage challenges that we're going to see here in the United States. And having those 1 million open jobs. Them manning that's the absolute move. I just wanted to add to that's a very believe they follow the things in New York about things points.
England, absolutely right. The demographics, China, Europe, here, all those demands that we have more in the way of robotics and productivity improving software and hardware. Yes.
I'm in the real estate data space, and I want to get your thoughts on what you're seeing and using your own proprietary data and building these AI models on top of your own proprietary AI. And thought on that.
In a real estate market?
In your real estate data space.
Well, I think the best thing that's going to happen, again, nobody can reason, is that real GDP is going to accelerate over the next 5 to 10 years into that 6 to 8% range. That should be very big for real estate, right? Well, just
Yeah, I have a following question. Traditionally, when GDP increases, population increases, also your research should best assume just you get the GDP increases so for its percentages that you mentioned earlier on. Is that going to formulate with the increase
in population? I'd say when people are feeling financially secure and optimistic about the future, which has not been the case. People are really pessimistic on that now. But when that changes, I'm no expert on in terms of answering the question, but over history, I do believe that's been associated with a pickup as we go through. But not an expert there. It would make logical sense.
AI needs to see with what it.
Pardon?
AI needs to quite a smooth.
Oh, yes. Yeah. And all right. Okay.
I think we need to get you a shot at track for your next CDP.
Yes.
Yes.
Yeah, sir. Claire. All right. Thank you so much.
Second.
we're really excited that we're hosting with your university on, these were experts and entrepreneurs and aspirational entrepreneurs in the world of AI, because we think the world's going to transform quickly, and you really want to get on the right side of the changes. So, and it's a very important thing that Jen, Tonya, and City of St. Pete and ARK together are doing.
Thank you very much for your inspiration. All right, give me just a second to get back on track with the other presentation. All right, we're going to move on to the main part of the presentation now. All right, we're going to move on with the presentations of the 7 startup companies that took place in the accelerator. So if you could grab your seats or move side conversations to the hallway, I'd appreciate it. So I'm going to take a second here to, again, thank the panelists that are giving their time to meet with these companies and to review their pitches. I'm going to let them introduce themselves. They do a much better job than I would. So I'll start with Joy, since she's got the microphone.
I'm Joy Randall. I'm a serial entrepreneur, and I have my own fund. I'm an LP in 4 other funds, and I have a company that helps founders scale their startups in.
All right, Ryan. Cheers, thanks. I'm Ryan Whittemore. I'm a partner of Florida Funders, the chief investment officer there. I'm proud to say I was born right down the street here. I grew up about 4 miles from here. I've been here my entire life, and it's fascinating and exciting to see what people like Kathy would have done. And I saw Ruben and Preston were back. It was one of the first exit we had as a founder. There he is. Brings a big thing to St. Pete. So very excited to be here today. And good. All right, Ashley and Bruce.
Sure. So you got info turned it on. No, that's fine. I'll just suggest. So hi, everyone. Andreas Calabrese. I'm one of the co-founding partners and general partner at Tampa Bay Ventures. We're a venture capital firm that's born here, invests here, has our entire focus here. So we're super excited to be a part of this center here at Tampa Bay Community Invest.
Okay, thank you very much, and thank you for agreeing to be part of this again. So as I said earlier, the 7 companies, actually 8 companies, we had one skiing injury that left one of the founders unable to attend. But the companies that went through the program attended 12 weeks of workshops, enduring 12 weeks of me, but with also the help of a lot of the subject matter experts that we have in the community. In the beginning of the program, I tell everyone that they have 90 seconds to 2 minutes to pitch and only 2 slides. That is met with great disbelief. But over the time, we help them get focused on the things that matter to the growth of their company, and more importantly, to the customers that they're appealing to. So you will see 7 pitches, approximately 90 seconds to maybe 2 minutes long, depending on how they go, and just 2 slides. After that, we'll have 5 or 6 minutes of Q&A with the panel, and then I'll bring up the next company. So firstly, I'd like to welcome to the stage Ramesh with Aapya Solutions. Okay, there we go.
Hello. Can you hear me okay?
I need this. Sure. Thank you.
The lack of real-time inventory intelligence negatively impacts retail business operations, resulting in overstocking, understocking, higher labor costs, and most importantly, shopper experience. These challenges are all of which affects the not only top line but also bottom line of these businesses, which historically have thin margins. These challenges are amplified in high-value space like wine and spirits, which is why we started focusing on this space to test and validate our technology and the assumptions, all with the expectation that we'll go to other verticals in the long term. There are about 40,000 small and medium liquor stores in the US, all of which have very limited technology beyond the existing POS systems and inventory ordering systems. Next slide. Solution. Vision 37 is a SaaS-based platform which leverages image recognition and machine learning to monitor, manage, and send real-time notifications to the users of this system. Our uniqueness is we are low cost, low form factor, high resolution, wide-angle cameras, monitoring 24/7, and with computer vision accuracy of around 95% and continuously improving. In addition to that, we have access to UPC data of 55,000 liquor products, which when combined with the real-time intelligence, helps us develop analytics, and data analytics, which helps the users to run their stores better. Our SaaS model reflects the current POS in terms of monthly subscriptions with minimal installation and hardware costs, hardware expenses. We installed our first store, a 1,200 square feet store, liquor store in Lake City, Florida, and we have up to 3 stores where we validated our product market fit for the last 6 months. Our target is to achieve 50 stores end of the year, all the while improving our accuracy and also implementing the data analytics so that we can offer that as a product. Thank you. And welcome to the journey. I'm excited to have you on this journey for the digital transformation of the retail space. Thank you.
Great job, Ramesh. They say investors get scars from things they've done and that didn't work out. My first deal at Florida Funders was in this exact space. It did not go as well as I'd hoped. And the reason is, from my understanding, you've got a very high barrier to entry with the distributors and the brands, and then you've got the liquor stores. It became almost impossible to penetrate. They didn't want somebody penetrating it. So my question to you is, how are you going to do that?
From the distribution standpoint, or?
To get your customers. How are you going to get past the roadblocks there of the groups that don't want change?
There are several key things we can point out from our learnings from the existing pilots that said, okay, you can say, okay, I have my POS system, for example, can do some things, but it's very reactive. What they don't know is the real time what's happening in the shelves. And the key thing is to have enough customer-facing products that we can improve the sales. And no system is able to do that today. They either say reactively, hey, I already sold this product, but I have no awareness of what's in the shelf, what's missing, what's misplaced. So the key is the real-time intelligence of the data that we can provide, along with obviously the ability to combine with the UPC data code for supply chain external use, and that can provide the data analytics around the whole merchandising aspects of each category in each brand on the shelf. They'll provide valuable information to the retailers and also the distribution channel. So that's kind of the key points where we leverage.
So I'm going to kind of piggyback on that. So I'm looking at the, kind of the timeline here.
Sure.
Are you in multiple retailers or stores within a single retailer? Question one. And then question number two, how much of an impact is not being integrated with the current POS systems impacting sales?
Yeah, so we are currently, like I said, focused on high value products, which is the wine and spirits, and up to 3 stores currently, and obviously increasing as time goes by. So we are focused on that so we could deliver, validate our technology, mature our technology, because it's computer vision, machine learning, a lot of aspects to that. And as soon as we feel comfortable with that, in the long term, we want to go into other verticals and expand our reach out there. That's the number one. The second question was around
the integration with POS impacting adoption.
The integration of POS currently not. affecting, but there is a big market segment that gets influenced with that. And right now, our approach, because of the limited company size and everything, early stage, we are focused, and so you want to execute well. But obviously, we are talking to POS vendors, and have very interesting conversations. Integration-wise, at the software level with APIs is very pretty easy, not too hard. So we feel comfortable we can do that, but we have those conversations going. Yes.
So you mentioned that there's minimal hardware that's needed, and then you also mentioned that the AI is done on the edge. So I'm assuming that device that you're putting in is where the processing is being done.
Yeah.
So what's that device? And then maybe could you go into a little bit of the details on how much each store pays you per month or per year?
So in terms of the hardware, we have, like I said, low cost, low form factor cameras that fit right on the shelves. So it's very easy to fit it on the shelf, very easy to install in a 1,000 to 1,200 square foot store, which we tested so far. Within 6 hours, we get everything up and running in terms of installation. Of course, the machine learning follows, which is incremental, right? Keeps going. The second is the AI at the edge is an NVIDIA platform, which is GPUs. And the real reason we want to do that is we want to provide really low latency. Pushing to cloud, we do push cloud for the application needs, but the inference is happening right at the edge, so we can immediately notify. In some cases, our retailers wanted to know, security cameras are not doing that a great job because it's very hard to see 6 different displays in a 1,000 square foot store. So we want to send real notifications right to the POS saying, hey, somebody lifted a product. And these are all the missing products. You want to do something about it. It could be stocking, it could be pilferage that you want to address as a deterrent. So all these are able to because of the edge processing. So that's why we are doing the edge and the NVIDIA platform, GPU for the edge. In terms of revenues, we are very early stage. So we're still in that stage. We did have early discussions with letter of intent, but we expect by Q2, beginning of Q2, we'll start seeing some of the early revenues as a software, as a subscription model, because our discussions with the retailers say, if you can compare with the POS, they have a 3-5-year contract with the software as a subscription. We mirror the same thing.
Great. Thank you, Ramesh.
Thank you.
Okay, next up, I'd like to welcome Tonya Elmore from Archslate.
Thank you, Ken. Architecture, engineering, and construction is one of the most collaborative industries in the world, but yet it fails to collaborate. Due to this, it loses billions of dollars due to labor shortages, project delays, and inadequate digital infrastructure. With approximately 700,000 architecture, engineering, and construction firms in the United States. Our current target market is small and medium-sized architecture firms, particularly those that have been started in the last 10 years, have about less than 50 employees, and manage about $100 million in projects. That gives us about 60,000 architecture firms. On an average, they spend close to $4,000 on design and operation tools to run these projects. Next slide. So Archslate, a real-time collaboration platform that manages your projects, tasks, documents, vendors, and budgets, all in a single intuitive hub. Our product has been developed with industry insiders and 13 design partners to make sure we are meeting the needs of architecture firms. Since November, we have onboarded 4 paying customers, paying us a flat fee of $350 per month. The pricing model not only provides the value add, but also an entry point for customers to start looking to streamline their processes. To drive growth, we are implementing a self-serve motion to get the product in the hands of customers. Customer feedback is an important part of our journey. Through weekly discovery calls, we are continuously improving our product and future roadmaps. In the coming months, we will be showcasing Archslate at architecture events like AIA Tampa and to industry insiders and potential customers. Thank you. Happy to take any questions.
Thank you, Tonya. Questions from the panel?
So I saw you said you did a flat fee. Yeah, first three customers. Makes sense. How does that compare, or your subscription rate compare to what they're paying today?
So currently, if they don't have anything, I think it's all spread out. You have spreadsheets, you have Microsoft MS Teams.
On your last slide.
Yeah, exactly. So it's spread out, the cost. So we are trying to consolidate that. So that amount can be anywhere from $500 to $400, depending on the team size. And a lot of these licenses are per seat, but we're trying to go with a flat fee to at least get them onboarded.
So you guys came from building a recruiting platform. Maybe you can kind of speak to some of the lessons that you learned in transitioning that platform to what did you learn about architecture?
Yeah, I think Andres was one of our first investors in our initial product. So we started out as a recruiting platform for architects, but pretty soon we realized that the volume is not going to be that big. And while we are talking to the customers, they told us that hiring is okay, we can solve for one of them, but once we get onboarded, how do we solve for the future problems? That's when we realized that we need to build something for SMB architecture firms to really get them into productivity and tie everything all together.
I was going to ask, what's the ROI that you're offering these architecture firms? How are you selling? They're going to pay $48,000 a year for what is the ROI?
So right now, a lot of their tools are all separated out. So they are using multiple tools to carry out the action. Once you get everything in one place, your projects, your tasks, budgets, your vendors, it makes it easy to make decisions. Once you have the data, you can run automation on it. Like, I think I'll pick on Ken for this building was supposed to be done in December, but it kept moving on. But how do you know what happened? So did the windows come in late? What timeline effects did it have? That's how we're applying to show them the value.
Any other questions? Thank you, Harsh.
Thank you, everyone.
All right, next up, we have Mark Parkman from Blue Fusion Technologies. You might trade up there if you need it, bud.
Can you all hear me? Yeah. Old Sergeant Major here, big voice, man. So we've heard about the promises of AI. It's going to change your lives, make everything better. And we talked about making AI more efficient itself. The problem today with AI, data normalization. Getting your data into the single form for AI training or visualization and analytics. Today it's done by ETL. 1990s technology, overly complex, takes months or years to install and eats up 60% of an AI budget. Our model data access on demand. Build ontologically designed schematic connectors that drive data with one-click, transform it and drop it into a single data form in seconds for normalization, for visualization, and or an AI training. We do this in 20% of the time and cost of ETL, which is currently used. The market for this technology is huge, replacing one analytical product, which we're doing right now, $1.4 billion a year in ARR TAM. The AI market is $8 to $10 billion, looking at 200,000 middle market companies right now that need to integrate AI at $50,000 for an AI MVP. We do this with a SaaS model, a pre-built connector marketplace, which allows our customers to build customized and robust connecting their disparate data fabric for $6,000 per seat or $100,000 per 5-seat SDK. We have had enormous traction since our release in Q4. We have adoption by LEA to include Pasco County in here in Florida. Testing by US SOCOM. We have built $12 million in pipeline in less than 4 months and are on track to sell 700 seats to produce $2.4 million in revenue that will then allow us to hire developers, marketers, and sales to support our sales relationships with the largest badge in this country. Ladies and gentlemen, the largest problem with AI right now is that data normalization is the most prohibitive cost factor in getting this in place. And we need to make AI more affordable. We have the team, the technology, 2 patents, the passion, and the expertise to make this happen and review and make boatloads for CAC. Bobcat, thank you very much for your time. Subject to your way.
Is everyone awake now? Questions from the panel?
Yeah. So, great presentation. I mean, if you were to kind of summarize for the general audience in kind of 3 areas, whether it's training speed, accuracy of outcomes, or adjustability, which of the 3 are you solving for the fastest?
Right now, we're solving for adjustability. Every one of our customers have huge problems with disparate data. ETL will take this and put this in one form. But when you go to a customer and they have legacy data in the 1990s, or I've got all these open source technologies and facial recognition, license plate readers, how do you quickly integrate those data sets and pull that all in for AI? So that's what we're focused on. They're taking a different data, make it simple.
So in that, do you foresee any risk from AI itself becoming almost like a superpowered data cleaning agent as a competitor?
No, sir. We've been told that AI is going to do what we do in 3 years. The issue is right now, no CEO is going to produce a new product based on AI alone. Everything is going to be validated by some human being using the analytics. We do see AI as being empowering. We integrate AI, machine learning, language processing, and facial rec in most of our solutions. So we see AI as an empowering entity, not the end state of itself.
So you mentioned the patents. Can you give me an idea of what the patents are for specifically? You don't have to go into the detail, but how are they used? I'm very familiar with software patents.
Yes, ma'am. One of our patents is for the federated search of heterogeneous and disparate data. The ability to search data with one click without analysts or technologists having to go to each database and go. The second part is our searches are dynamic. Most searches are static. You fill out a box, you can't change it. With our SDK, you can modify the queries and you can modify them on the fly, and they're iterative. So while you're at home at night, our technology is searching those databases for NDs or anomalies using AI and other learning technology.
Okay. And one last question. Splitting the market between public and private sector, are the majority of your initial clients in the public or private sector?
Our initial clients are all in the public sector, law enforcement, government. Our return from journey now, we're pushing it to know your customers, IGN analysts, or big banks and casinos at this.
First of all, that's how you present. Founders use that kind of energy whenever you present it. Great job. My questions, I'll ask a different one. What's the integration like for a company? They come in, what do you have to do, and how long does that take?
So the beauty of our technology is that we vetted for IG stops and power. So there's no proprietary chokehold on the customer. We use MongoDB or Elasticsearch databases and code for our SDK, JSON, Python, React, jQuery, very easily learned. And so we want to empower our people to do it themselves. They already own the data. They should not be, if they rely on me as their contractor, no possible. So we have built a solution for them to learn how to solve. We'll provide QC up the actors right they may need, and we'll work our service through other service providers. We're not going to provide the solutions ourselves.
Please tell me you're involved in the sales.
I'm 3 continents and 2 weeks. Yeah.
Awesome. Great job.
Thank you for waking up the crowd, Bruce. Okay, next up is Sam Cummings from Dataplant.
Yeah, where they walked. I need this. Y'all ready? I come with a truth, huh? If I be born for a year, cheeks teach mark. Out of the world, my one thing. And everybody doing? Y'all like Bruce or not? No? Hey, Bruce is the truth. We're talking about Dataplant. In today's subscription economy, the battle for revenue retention is fierce, especially for long-tail businesses that have the daunting task of having to engage every one of their clients personally. As the previous head of data science at the leader of customer success, now leading the team seasoned in machine learning and enterprise SaaS, this is not a problem I'm a stranger to. I know it intimately. Join us on our journey to tackle this $3.6 billion opportunity that every one of us personally can relate to. This is the challenge of our lifetime. Digital empathy. Being able to service customers at scale is where the biggest businesses will have success over the next 10 years. We're facilitating that success. Our team essentially has built this platform in the real experiences working with customers. We have 6 clients live, 90K in revenue. We're targeting 300K by the end of this year, and we are on track for 1 million in ARR by 2026. This isn't just a tool. This is the empathetic engagement future that we all want. We don't want to be a number where systems essentially are using us for our money. We want to feel like we have a relationship.
our platform is going to facilitate that. We're not just, another AI tool looking for a problem. We have taken generative AI technology and applied it specifically to the problem of revenue retention. Hey, we're not just keeping pace in the AI base, we're setting it.
Great presentation, Sam. What customer focus are you? Is there a particular segment that you're focused on, industry?
Companies that have a long tail segment. So generally that means they have more than 200 reps on a team, but for every rep they have 300 to 400 people. So we're working with people that have high value customer books and helping them scale their internet.
Okay, I think I got it better now than I did before. You want to tell me exactly how the technology works, like exactly what you're doing?
Yeah, so we have built AI that automatically analyzes the data in the CRM and then generates the dashboards that tools use to drive their customer base, as well as the personalized communication. So we've literally closed the gap from raw data to actionability. Our reps, like Kathy was showing you, she was talking about what Dataplant's doing.
Yes, I mean, customer success is obviously a very, 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 very quickly growing space, and is more importantly growing because the cost of acquiring new customers is getting so expensive. So this makes a lot of sense. One of the companies that we've invested in this space has had a challenge of right-sizing a model to individual company ecosystems, right? Like, what is great customer success for you in your interaction with your phone bill is very different from your interaction with a 5-star hotel, right? And like what a customer expects and how to isolate customers you should be targeting can be different company to company. So what's the process for setting up with a new client that specializes this model to them? And then secondly, what's common between all of the different customers that you have, and kind of how's your technology leverage something that's common to most?
No tool in the market has solved this problem. The reason why it's hard to deliver these platforms for every unique company is because they're heuristic based. For those that might not know that word, what it means is they're rule based. If less than 6 logins, do this. If greater than 5 views, do that. That industry issue is what makes it hard to back schools that report. What we've done, we built a predictive model is a tool. It's not a separate add-on that you pay for. That's what most of the tools are doing in this space. And so what that allows for is our tool will automatically analyze your data, label, classify, and figure out what's actually relevant to driving outcomes. So customers that give us some time series data, like data usage over time, but then they'll also give us their outcomes, like who churn, who renewed. So that allows us with our structure is not standard. There's no standard object. Everything essentially allows for it to be dealing with any custom objects you have. So that's how we're able to be a true area space. Everyone else is just building off of Salesforce. I have a standard object structure, and I build rules that power my automation. We're completely different than that, and that's what allows for us to be played.
All right. Thank you, Sam. Good job, man.
All right, next up from Noxo Data, we have Dae Kim.
Mic or no mic, your choice.
Hey everyone, I'm Dae. Today I'm here with my co-founder David, flew from Seattle to talk to you about Noxo Data. It's a conversational data analytics platform for consumer and packaged goods companies. So the problem we're trying to address is that today business teams at CPGs have a really hard time accessing and analyzing data. They have basically 2 options. One is they can ask a data analyst or data team to pull data for them, or they can work across like 7 different Excel sheets, and it's a pretty painful process. It's very manual. So either way, it takes days or weeks for them to get answers back. It's a pretty time-consuming process overall. So what we built is a platform that allows users to talk to our platform as if they were talking to a person conversationally and get insights from their data in seconds rather than days or weeks. Here's an example. We have a customer today who's the manager of supply chain at a company that makes frozen dumplings. And to analyze supply chain costs, he needs to combine like 5 different Excel sheets from their warehousing provider, logistics, freight, etc., and manually join those Excel sheets together. So instead of doing that now, he can just upload all his sheets into our platform and ask questions about their data and get answers in seconds. So it's a lot easier for him. So that's kind of the value prop we're offering to them. And we estimate the market opportunity in the US to be about $10 billion based off of labor and time savings. So where are we now? So we launched our product in June of 2023. We raised $500K in pre-seed funding from leading investors in October. And today we're working with 7 customers, 4 of which are in paid pilot. Started with mostly smaller CPGs initially, kind of roughly 30 employees or so, but now have since moved upstream. So now our customers are in thousands of employees size range. Over the next 6 to 12 months, I think our goal is to really expand our go-to-market, expand our product suite as well to deliver more value for our customers, and eventually raise our seed round around the end of Q2 as well. So if you're interested in learning more or have any companies that you think we might be able to help out, we'd love to get in touch. Thanks so much.
Thank you, Day. Questions from the panel?
Sure, great job, Day. Did I hear you correctly? You said the market is 10 million, or did you say 10 billion?
Yes, 10 billion.
Billion. Okay.
Billion.
All right, good. That makes a lot more sense. When you're going into a brand, I mean, there's all sorts of, I guess, similar question to what I said earlier on barriers to entry. And there's all sorts of groups trying to work with these brands, and there's all sorts of obstacles for them getting to the shelves. Like, how are you penetrating that and getting brands to sign up and make this a must-have for them?
Yeah, so within a manufacturer, so let's say we talk to like a Pepsi or Coke, right? The teams we target are business teams, so let's say supply chain, biz ops, finance, sales ops, etc. So we start with like talking to the actual end user, right? So I used to be a strategy consultant for CPGs, so I've actually done some of the work that they do. So I just talk to these people and be like, hey, what kind of work are you doing today? What kind of data do you use for that? And then just show them, like, this is how you do it on our platform. And the light just goes off in their heads because it's so much easier. It takes seconds and saves them lots of time. So we start with the business user. After that, we integrate with the data system. So that obviously involves analytics, IT, etc. But the core kind of, I guess, starting point is really with the business user and kind of breaking into them, showing them the value prop.
So to that end, I know a fair amount about this space. I can see some things of where this could go long term. What is the price point and what is your typical lead to cash timeline? So you speak to a customer to the time that you actually close the deal. What's that been so far? I understand you're early, so I'm not going to freak.
Yeah, so obviously we're not like trying to make tons of money just quite yet. So we started with paid pilots. The price point we started with is $30 per user per month. We're aiming to convert that into enterprise contracts. So obviously we need to test that out with our customers, test our pricing. Right now we're aiming at kind of roughly 20 to 30K annual contracts for some of our smaller customers, but that'll change depending on the size of the customer. In terms of the lead time, what we typically do is start with a kind of a small scale, very limited pilot, like I described, show them an analysis, they send us an NDA, we upload their data, show them analysis, that's free. We do that. That takes about maybe like a week or 2 weeks max. After that, we do a paid pilot. So that's when they start paying. We integrate with their system, which is a pretty quick process as well. And then, yeah, we charge them monthly after that as well.
Andreas, any questions?
Yeah. I guess initially, from the pilots that you have or the early customers that you have, what are some common queries?
So I think it varies by the bucket of customer we're talking about. I think I mentioned a few earlier. For supply chain, one thing that we're seeing, which is actually very interesting, is the reason why we focus on CPG, is that the thesis is that there are similar analyses across companies, right? If Pepsi's asking a question, chances are Coke's asking the same thing, right? So we're already seeing that today, for example, in supply chain, where teams are often trying to understand, like, what is the actual cost of an order, right? And it's hard to do that today because you have to combine data from your warehousing provider, your freight provider, logistics, and also look at things like customer feedback, right? That's really hard. So we've had multiple different customers ask questions like, what is the overall cost of my order? How does, like, let's say, negative feedback affect, my rate of return, et cetera? That's an example of a question. I think there are also very high-level questions that are very common as well. Things like, what are my top-selling items? How can I upsell these items, and which customers is there opportunity for us to upsell into? So there are some examples of common questions we're being asked right now.
Cool. And just quickly, what AI infrastructure are you guys being built on, or are you building this model internally?
Yeah, so we're using what's typically called like a compound or ensemble infrastructure. So what that basically means is at the top, there's a generalized AI model. So that's something like GPT-4, Anthropic, Claude, et cetera, that understands the question. And kind of from there, it delegates the process into specific models that we've trained. So for example, let's say this analysis requires you to execute some Python code. We'll send it to Python model, right? Or this analysis requires this process, right? So we'll send it to that model. So that's kind of the infrastructure we're building upon. So we're building on top of some of the AI providers out there today, as well as using our own models as well.
Thank you, Dick. All right, next up we have Avi from Subconscious AI. Mic or no mic? Okay. Stand away from the wall. Be a little bit better. Yeah. No, really, just right by the podium, just not against the wall. Yeah.
Good afternoon. My name is Avi Yashin. I'm from Subconscious AI, and we are building a digital twin of society to help market researchers, policy researchers, and healthcare policymakers perform research better and faster. Today, the market research industry is a $100 billion per year industry. This industry is very profitable, and because it's profitable, it's been taken over by private equity. These industries have 50% margins, and these margins have been sucked out to pay the coupon. Innovation budgets have been slashed, and innovation has fallen to zero. When you look at the user experience, it's very similar. If you want to perform a market research experiment today, you need to get an experimental designer. You need to find someone to recruit respondents. You need 3 PhDs, 6 months, and a second mortgage just to get started. In the time that I've been speaking, our customers like SpaceX, United Health, and Pepsi are able to design, run, and analyze an experiment with thousands of synthetic respondents with results that are 90% similar to human and rising. Right now we have partners in the economics, psychology, and sociology space. They are helping us replicate the world's research in these domains. We're working with top research universities, a couple of Nobel Prize winners, and our results show bioequivalence in many of these domains, and our users are pretty happy with it. We're raising $3 million to disrupt this space and change the way businesses operate. Thank you.
Thank you, Evan. Questions from the panel?
So you state that you're a co-pilot for market research. Could you maybe explain kind of what are the inferences or what are the suggestions that the co-pilot is making to the researcher? Or is it kind of more of a data assembler? What's the kind of the partnership between the human and the machine that you see for the product?
So we are using about 1.1 million research papers, causal research papers, to really teach a business scientist how to ask a causal question, how to design a causal experiment. These are discrete choice experiments. These are conjoint experiments. So we really kind of help them to think causally. We design the respondents, we help them design the dependent variable, we help them design the attributes and levels. We kind of walk them through the whole thing. So we kind of reduce this 6-month engagement into, a couple of minutes.
Okay, so you're actually building the model. So I get it. I've actually done a fair amount, and I've invested in a company in the space in the past that was bought by a private equity firm, by the way. So shocking. Tell me, let me understand. So I understand the marketplace. What's the $3 million use of funds for the $3 million?
Right now we're expanding on our POCs. We are about $1 million of that is on cloud compute. We've already been given about $1 million of cloud compute from the hyperscalers. So this is kind of what is the costs that are not covered. And then $2 million is to build out our kind of go-to-market and continue delivering on these engagements. Right now we have more customers than we can kind of service because we're trying to provide this kind of consulting-like experience. So we're blocked there a little bit.
Says right there, largest replicated repository of Turing experience. I'm not familiar with that term. What's Turing?
Yeah, so the classic kind of Turing test was replicating a conversation. Turing experiments is now kind of this whole class of experiments where you cannot distinguish a human respondent from an AI respondent. In our case, these Turing experiments are any psychology, sociology, or economics experiment that has been replicated, well cited, that explains causally why any human makes any decision. So the most common research that you've seen, we've replicated with our synthetic respondents, and we've shown that you can't really tell who's human and who's not.
Sorry, just don't have the best vocabulary.
No,
Thanks.
It's a new concept.
Figured there's got to be somebody else out here who wasn't familiar with that. Bigger question was, you mentioned 90% accuracy to what a human would respond. What is, if you did a Pepsi does an ordinary group, what kind of accuracy do they have in that in a human-led group?
What a great question. So human-to-human accuracy is about 70%. So if you perform the same exact experiment twice with two groups of humans, you're getting about 70% correlation of the causal coefficients between the results. That 70% is what we use as our benchmark, and so we're at about 65%. Eventually, we'd like to build our own language model that is the first kind of human-level GPT that performs as well as human, not superhuman, not.
Is it possible to increase that over and above to where you're representing a larger audience of humans as opposed to whatever the number of subjects could be in like a live in-person sample?
Yes. So right now, we can use about 8 language models on the back end, so we can tell you which language models are more human than others. And what's interesting is new models that have more RLHF are actually less biased than some of the older models and actually perform worse for this use case.
Thank you. Any other questions? All right, thank you, Abby. All right, and last up we have Adam from Track AI.
Can everybody hear me? Yeah, advice? Okay, I prefer to do without advice. There's going to be a audience participation. How many of you have been in sales at some time in your life? Okay, you had to convince somebody where to go to dinner. Everyone's been in sales. The funny thing, sales drives the economy, it drives everything we do, and yet 60% of enterprise sales teams are going to miss their number this year. And it's really because of 3 things, primarily. Administrative overload. We're asking too much of our salespeople, right? They have to do all this admin work, which reduces the amount of time they have to sell. The average salesperson spends 12 hours a week selling. If we can give them back 5 hours a week to do more selling, that's a 40% increase in sales opportunity. It's a big deal. Inconsistent sales performance. Look, great athletes all have coaches. Salespeople need coaching. The problem is it's very generic today. We need to give them coaching that is context specific and frequent enough so that they can perform better all the time. And finally, limited deal visibility. You need to be able to see into the deal as a sales leader to know how to help your team perform better. And that doesn't happen because these sales conversations, I'm going to step back. A company spends about 15% of revenue to drive people to a sales conversation. You have this great conversation, it lasts an hour, salesperson hangs up, and poof, it evaporates. We know nothing about that conversation except for the 3 bullet points that are put in their CRM. It's all lost. It's the blind leading the blind. This is the biggest problem in sales. The market's huge for sales technology. It starts with things like CRM, $88 billion. It's a $100 billion revenue industry. You've got your sales acceleration tools like Salesforce Outreach. You've got your Zoom and Teams and Google Meet that we've all used. You even have technology to record the call. But it's lost information. We're forced to dig through it. And Gartner has identified this huge gap, that there's a $23 billion gap that sales conversation intelligence is something that is missing. It's an opportunity to find out and understand what took place during the conversation, what were the buyer insights, how do we move this deal forward, how do we prepare a deal strategy. These are the things that are missing. And it's interesting, if you ask thoughtful questions when you're talking to a buyer, they will tell you exactly what you need to know to win their business. But if it goes up and evaporates and you don't hear it anymore, see it or read it, it's gone for posterity. Next slide. So we developed Track.ai as a SaaS platform that's leveraging large language models, generative AI, as well as natural language processing and machine learning to mine these conversations for things that matter. What actions need to take place to move the deal forward? And can we do any sales coaching? We offer both a kind of a self-guided coaching for those salespeople that don't want to think that their boss is looking over their shoulder, as well as a coaching library. We also identify buyer insights. As I said, buyers will tell you a lot of things. They often get kind of unnoticed. They're too subtle and nuanced, but they're there in the conversation. And we also do a lot of process automation. We want to remove the friction so salespeople find that using this technology is easier. In fact, it's probably the only technology in sales where the salespeople like using it. It doesn't become a hardship. It doesn't become extra work because it does so much of the work for them. It'll even write a follow-up email for them. We've built traction. We piloted in December of 2022. We took our first revenue in January of 23. We've done about 25 companies, 200 plus paying users. We've got several hundred free users that we need to convert. And usage growth is one of our measurements. It's been growing about 26% month over month. So we're getting great usage. People love it. Our targets for 2024, 50 new customers, 800 more users. We want to achieve a monthly recurring revenue of $40,000 per month, more than where we are today. And today, there's a lot of people using it. They give us great accolades. Sales leaders, sales people, and account managers are using this to close more deals and keep the customers happier.
Thank you, Adam.
Thank you. I'm curious how this turns into a must-have. And I know everybody wants to increase their sales, but I'm looking at, I think, around $9,000 a year per company average contract. What are some of the ROI numbers that you have? Like you says, enhance their deal closing rates, but like, what specifically can you tell a company that they're going to benefit from and that they're willing to pay this?
Well, we've been interviewing a lot of our customers to understand how they're using the technology, how it's improving their conversion rates and their retention. It's still too early to have a lot of hard data. We're getting mostly kind of anecdotal data that they now are able to review a conversation very quickly, know where the deal is, and then give guidance to the people. So the fact is, now they know. I mean, think about a conversation. I used to have 145 salespeople in my last company. I sold it about 2 years ago. And I knew they were working. I saw them in the bullpen. But I didn't know whether they were doing well or not until they came in one day in my office and said, hey, we won the deal or we lost the deal. Of course, we lost the deal 95% of the time. We won the deal 85% of the time. So I couldn't help them. And when we did pipeline reviews, kind of midstream, and I bring them in and say, okay, how are we doing with this deal with Ford? They would say, no, the buyer loves me. And the price is too high and our delivery's too slow. I'm like, you just had an hour-long conversation with the chief marketing officer of Ford. True story. And all you got was the price is too high and our delivery's too slow? I need more. I can't work with that. You've got to give me some movement. Well, today, that same conversation, I go in and I can look for that data to see what was actually said. And it's a true story about this from a client. They had a great meeting, well, they thought it was a great meeting, 3 weeks ago. They were unsure 10 days in how to move the deal forward. They had not heard from the customer. They ghosted it. They used Track, and they asked Track, tell me how to move this deal forward, and made some recommendations based on the conversation. So they put it into an email saying, I know you wanted to talk about security, we can set up that meeting. You wanted to get some of your colleagues engaged, let's set up that meeting. And by the way, you've asked about this ebook. I've included it in the email. They got a call 20 minutes later, set up a meeting. Now, a week later, they're having that meeting, or he's prepping for the meeting, and he shows back to Track and says, tell me what we should discuss in this coming meeting. And it came up with 5 paragraphs. And I think there was something like, again, talk about security, talk about onboarding and so and training and so forth with their selling. And they didn't have any idea, but the beauty is they didn't start from scratch, right? They started off the call kind of where they left off the last call. And he said that the customer said to them, you must have a great memory or great note. How did you know all the things to discuss? And it was track. I mean, he's cheating. He's using track. So anecdotally, we had a lot of data, but we're not far enough along. And we haven't spent any money on marketing yet. It's really been product-led growth or product development. We're now at that point trying to raise money so that we can really go to market with advertising, social media, and actually doing some real sales.
Okay. So this is a space I have a pretty in-depth knowledge in. How do you correlate what you're recommending with sales methodologies that are in use? Because there's a number of them, and companies tend to pick one. And so it could be customer-centered selling. It could be target account selling. It could be, there's 50, right, if I kept going. But most companies that are any good at what they do at sales, they tend to build a whole list of processes. So when you're telling me that the AI will craft an email, there's a lot of tools that will do that. But if it doesn't match my marketing message, if it doesn't match how we sell, that becomes counterintuitive for management.
It's a great question. One of the problems, all companies have a lot of things in common, and yet all companies have a lot of things that are unique. So recognizing that, we built the ability in Track to create custom analysis. So I'll give you an example. We have a customer, they sell a series of software to help their customers sell on Amazon. And the means that, well, I can help my team, but I need to know the following on every call. Did they introduce themselves and the company very well? Did they discuss the agenda for the meeting? Did they discuss the software features and benefits? When they were done, did they do any upselling or cross-selling? Then, did they review the features and benefits? And finally, did they push for a next meeting or try to close? With those 7-ish issues, so I can look at those answers and I know exactly where my team needs help. And that's unique. It is business completely different from another business. So that is that unique capability that you're pointing to. Everyone has to do it differently. We want to make a tool. We built a tool that allows you to customize the analyses to your needs.
I guess final question here for me. So on the previous slide, you had kind of I don't remember if it was the revenue or the market capitalizations of CRMs for this one. So clear story here is the CRMs are about 10 times as valuable as everybody else in the sales space, and that's because if you hold the sales data, you basically hold all the economic leverage data for the whole organization, right? So most likely, you'd imagine that Salesforce is going to release a Salesforce native Copilot. HubSpot is going to be releasing a HubSpot native Copilot to bring more of the experience inside their platform. So how do you think Track exists in a world where your CRM has a Copilot that's aiming to do a lot of the process automation and insights for you?
You know, you can argue that almost any company could attempt to do this, but many will not. Salesforce tried this. They bought a company renamed Einstein and Lee Bezos for the purpose it was designed to do what we're doing. Instead, they now analyze the data in the CRM, try to identify who are going to be the hot opportunities. The problem is most CRMs don't have much data in them. Those people are reluctant to put it in. We are trying to make a feature. We're capturing these conversations and we're injecting into Salesforce and HubSpot. So we're removing that workload. So they capture the data. We automatically join these calls. There's no work there. So we're making it easy for people to use. And I also don't think this is going to be a one solution, just like there is the Salesforce and a HubSpot and a Zoho and 100 other CRMs. I think this is going to be a pretty big market. And I think it's going to be really big because every sale takes place mostly by conversation. You know, in the old days, it was people, you get on the phone and you would sell them. Now they do a lot of the research in advance, but when you do get on the phone with them, you got to make that call count, right? You have a lot less time to win this. Now our focus is really on professional services, not software. Like we don't go after companies that are selling a software product, Mike, because they don't have to like or think that the salesperson's that great. If you happen to love Salesforce, then you're probably going to buy the product, even if you didn't like your salesperson. But if you're selling insurance, which is one of our targets, you're selling a product that you hope your customer never needs. They're never going to experience how well you answer the phone and how responsive you are. What they're caring about is how much empathy did you share, and how knowledgeable were you, how quick were you to respond, and how thoughtful were you are. This is what professional services organizations need and why the calls matter even more so than in most other businesses. So we're focused on financial services, wealth management, insurance, digital agencies, consulting firms, people that are selling brain power rather than selling powers.
Any other questions? All right, good. Thanks, Adam. All right, that concludes our program. Again, thank you all for coming. I appreciate having the community here to hear about our programs, our building, but also to hear about the 7 companies that came, that endured 12 weeks with me in the workshops, most importantly, but are building a new generation of products. Some leveraging AI, some the picks and shovels that'll make AI more adoptable by other products and other companies. But we really appreciate the fact that the community is here to celebrate these folks, but I would appreciate it even more as you walk away, think about ideas, think about connections that you can make for them. Maybe you're a customer, maybe you're a potential investor, maybe you know someone that would be a great customer for them. Think about the key points, the talking points that they made here, and think about connections that we as a community can make for them to help accelerate their success. So with that, hang on one second, Nick. With that, the 3rd floor is open. If you have not been to the building, because we are only about 3 or 4 weeks old, please join us upstairs, take a quick tour. I'll be there along with the other staff to answer any questions, and feel free to help people know about what we're doing here and the type of companies that we help. Nick? They'll be on video shortly. So yes, they'll all be available. So again, thank you all for coming.
Thank you.